All right, so I'll start. I'm not sure how much time exactly I'm going to take, really. Hopefully it's going to be at least a bit interesting or insightful for you guys. I know probably quite a good portion of you guys maybe are already living your way on Bitcoin. Everyone has their own type of setup. Some do it non-KYC, some do it KYC. You know, I've been around for a couple of halvings, a few cycles. Myself, specifically in 2019, started working in this Bitcoin banking app in UK called Mode. The whole idea was that we wanted to build this Bitcoin banking solution that would essentially allow you to live using Bitcoin. Back then in 2019, it was a custodial setup, which retrospectively now I'm not too proud of, but it taught me a lot about what does it take to really bridge Bitcoin with the fiat world. And the dichotomy we live in right now is basically that people who understand money, they want to own Bitcoin, usually only Bitcoin, but they still need to operate in this world of fiat. And you know, you still need to pay rent in euros sometimes. Maybe you need to pay for groceries in euros. And of course, the end game that probably most of us agree that we want to achieve is that there's a circular economy of Bitcoin spending, maybe through Lightning, maybe through some other L2s. I'm not sure what's going to turn out to be the case, but in all of those cases where it's not really possible to pay in Bitcoin, there is a way to still live on Bitcoin as long as you can liquidate it instantly and conveniently. So firstly, I want to just show you a couple of charts on what's happening in Europe. So these, by the way, are straight from ECB, straight from their own research on European central bank's website. And they did it themselves. They did the research asking everyone what is their inflation expectation. And what you can see here, the blue line is people that have no trust in the ECB. The yellow line is people who trust ECB. And the vertical axis is basically their expectation of inflation. So what we can see right here is that, of course, the distrust in ECB correlates with higher inflation expectations. But you can also see that the gap between that expectation is increasing. So people that do not trust ECB, do not trust the monetary policies that Europe has, or maybe the fiscal policies that the governments have, they have increasingly higher inflation expectations. And that's a cornerstone, I think, for people when thinking what kind of money they want to own, you know, and whether this monopoly money that we have is even money in the first place. I'm talking about euros. Another thing that, again, comes from ECB is actually has been just published a couple of weeks ago on their own website, and it's titled, "Just Another Crypto Boom? Mind the Blind Spots." And what the graph shows here is the increase in crypto adoption, the increase in euro value of crypto assets that Europeans hold. Of course, these guys, they don't specify Bitcoin or not, they just take it all in crypto, but still, what it shows is that more and more people adopt crypto, Bitcoin as well, and this particular research is quite conservative. There was this one comment by a guy comparing different researches, and ECB is saying that around 9% of Europeans own crypto, which is heavily underreported, because if you compare it, for example, with Gemini, if we look at France, for example, ECB is saying around 6 or 7% of French have crypto. Gemini is saying 21%. Italy, 7% against 19%. So it's very likely that maybe the answer is somewhere in the middle, but ECB is probably underreporting. Both of these studies are primary research, you know, going out, asking people, I don't know exactly the methods, but it's collected data. And the conclusion that these guys make is basically this. If the current trends of rapid growth and increasing interconnectedness with traditional finance continue, crypto assets will eventually pose risks to euro area financial stability. You know? And this is on underreported data even. So let's unpack this a bit. They say rapid growth, that's 9%, likely it's probably much higher. They say interconnectedness with traditional finance. That's something I'm gonna touch upon, but from the positive side, because in a way, you know, as much as we wanna bash Europe, relatively, the payment rails are quite good compared to Americas, compared to other continents. So that interconnectedness that they themselves kind of regulated and created is what they also think is kind of incentivizing or posing a risk to the euro area financial stability. So we can kind of gauge what emotions they have about this, and perhaps that they're still scared about it. But on the bright side, as I mentioned, in Europe, the interchange card fees are regulated down. I don't know how many of you know this, but it's roughly 0.2, 0.3% on card payments, whereas in USA it's like 10 times higher. What does it mean? That, well, basically it saves you around maybe 500 million to 1 billion in total euros across customer base in Europe. And on the other hand, when it comes to transfers, they have something called SEPA Instant. And it's been around, but since January 9th, actually they are enforcing it. They're enforcing receiving SEPA Instant right now. They're enforcing the equality of charges, so banks technically can't charge you more for the instant transfer than from a normal SEPA transfer. And from October 9th, they will also enforce sending SEPA Instant as a requirement for all European banks. And in the coming years after, it's also going to expand to non-European countries that want to participate in this SEPA network. So that's the situation in Europe. And now I want to zoom out a bit and cover the sound money, you know? And I'm not going to go into detail. I'm sure all of you guys probably know the properties, but quickly to refresh our minds, sound money is supposed to be scarce, verifiably fixed supply. You don't want to get that inflated away. It has to be durable. You don't want to trade in oranges that get spoiled, you know, no deterioration. It has to be portable, easy to store and move, divisible, because to be a common denominator, to be the global money, you need to be able to pay any value with it. It has to be immutable, fungible, permissionless, transactable. You know, there's a bunch of tables online comparing Bitcoin, gold, fiat against it, but we all know the answer to it. The only one that is truly fulfilling all of these points, and there are more points, I guess, but these are, I guess, most important, at least in my view, is Bitcoin. But I don't see Bitcoin as an investment. It's not supposed to give you cash flow. It's not supposed to give you a return. Because people that think about it as an investment, they still have it in mind that they're buying it, it's going to appreciate in value, then they're going to sell it back to whatever. But it shouldn't be the case. That's not the mindset that most people that live on Bitcoin have, because what Bitcoin actually is, it's time traveling energy that you can save and spend. And this sounds like a mouthful, and it's not, you know, it's not like actual energy that you can bottle up and have it as this universal capacitor, but it's quite close, right? It's the closest abstraction we have to storing energy and then being able to transfer it through space and time, save it, and spend it. All I'm saying is that basically it's money. And why would you save in Bitcoin? Capital protection, right? Again, I'm not talking about investing, I'm talking about saving, and there's a fundamental difference here, because when you have enough capital, you want to protect it. And in order to be able to protect it, firstly, you have to actually own it, and then that capital also, or let's say that the vehicle in which you put that capital that you acquired has to be able to escape wealth erosion. And Bitcoin solves that. But on a more philosophical level, when you are saving in Bitcoin, And when you're living on Bitcoin, it really changes your mindset a bit. Because when you have your whole wealth with you self-custodially in a hardware wallet or whatever your setup is, maybe in multiple, but you can bring it with you whenever, wherever, it means that you can move freely. And you know that you don't need to worry about repatriating the assets or basically freezing them in some other country. You can really move, and no one's going to be able to stop you. And specifically, no one's going to be able to stop your capital. You can also express yourself freely. You don't need to be afraid to be canceled because they can't take away your wealth, right? Whatever people say, if they are angry about your opinions, you still have your life. You still have your lifestyle. You can live a sovereign and responsible life because Bitcoin and owning Bitcoin is kind of urging you to and encouraging you to rethink systems. And you can rethink those systems in a way like you rethink the money as well. So it is about independence, and it is about spending with intention. And I think this last part, spending with intention, really hits home when you become a €0 Bitcoiner, as I like to define the customer base that we have at wave.space. Because when we launch our products, sometimes we get this comment, why would you promote selling Bitcoin? But then the issue is that these guys, they don't have enough Bitcoin. Of course, if you have some Bitcoin and you still have euros around, go around and spend euros. But if you have only Bitcoin, you have no other way but to spend it. But when you have no other way than spend Bitcoin, it really promotes low time preference, and you start rethinking whether it's worth it. And that changes your perspective on things. For example, 3 months ago, I came here to Madeira, and it's not like I can buy a car here because I'm leaving. I'm not going to buy a car for 3 months. I need to rent something. And to rent a car here is like 700 euros a month. To rent a scooter is 250 a month. So when I have to pay in Bitcoin, I really think about it. Am I going to take a car? Or am I going to risk my life on Via Rapida with a scooter and pay 3 times less Bitcoin? Of course, I'm risking my life. So that's, I guess, a joke. But what I mean is that when you're around shopping and you're sitting and let's say you're drinking coffee, you really think whether you want to get the second Chinese, right? Or whether you want to keep it in Bitcoin still. But also it's a stance against monopoly money. It's a principle that you have, and that principle simplifies not only your wealth strategy, but your mindset too. Because when you stop caring about all of this diversification, am I earning enough return? Should I be investing somewhere else? And when your only goal becomes to accumulate Bitcoin and perhaps to also earn a bit more Bitcoin than you spend, it's very simple. You just have one single number that you're optimizing for, and you just put all of your energy that you convert into Bitcoin, and you're living on it. If you're already getting paid in Bitcoin, that's also cool. That's the easiest part. You don't even need to convert anything because let's say you have most of your capital in Bitcoin, and even your disposable income comes in Bitcoin. Because when we are talking about €0 Bitcoiners, the main kind of last part that we're trying to solve for is people being afraid to convert their disposable income to Bitcoin. But it's actually a rational choice because you can capture value with it. The thing is that if you look back 5 years or if you look back 10 years on a monthly basis, Bitcoin grows from 5 to 7%. Even with fees back and forth, even if you, let's say, earn 3,000 euros, you convert it to Bitcoin and you need to sell all of it within the same month, you can still capture value with it. And also at the same time, Bitcoin is volatile, right? Or at least in like basic terms, even though the, let's say the risk-adjusted volatility is the best in class. But when you're converting all of your value into Bitcoin, you are not missing out on all of these crazy days when it goes up, and it usually, on a long enough time frame, goes up much more. So that's the case for becoming a zero-euro Bitcoiner. But why would it not be the case? So people need to pay rent, people need to buy groceries, pay taxes in fiat, and that's them basically saying, I need to have some euros. And I'll show you how that's solvable. There's a fourth point that is not really solvable, is if you don't have any capital yet, if you're just living month to month, and let's say you have 2,000 euros to your name that you're going to spend within the next 30 days. Of course, you have no buffer to weather volatility. Okay, keep it a bit more safer. Accrue capital for like 2-3 months when you can weather the volatility for that single month. If you will have enough money to pay for rent, then you can think about it. But I think for most of us, this doesn't apply. Now, another big part is the ownership, because even when you, let's say, buy Bitcoin and you agree to all of these points that I mentioned about sound money, if you don't own Bitcoin, you're losing basically the main point about Bitcoin. Because custodial Bitcoin is not your Bitcoin. It can be censored by either the company that is custodying it or by the government. When I say censoring, I mean at some point they can come about and say, I'm not going to allow you to transfer this Bitcoin to certain addresses, blacklist certain countries or certain AML checks. It can be frozen if they don't like you. It can be seized by governments. Or it can be exposed, like the recent Coinbase attack, right? It's just a simple social phishing where they had to speak with a bunch of customer support to be able to essentially see that a certain person has 15 Bitcoin in his name. And maybe this is not a big deal now, but that information always stays. And 15 years down the line, it's going to hurt you. It can be stolen as well if it's hacked, of course, or if your account is hacked specifically, or if the whole company is hacked. And the losses are accumulating. I tried to count it myself. I only looked back to 2017 right here, but I can see it's already above 25 billion in losses, and it's increasing. I'm not even counting all of the Bitcoin that was lost or hacked prior to 2017, because when it had no value, it probably would be a much bigger number if we count it at today's value. But some people would say it's not only that it can be censored, but it's also at some point on a long enough time frame, it will be censored, it will be frozen and seized and exposed and stolen. So, that's kind of a main point that's very important when living on Bitcoin. It's not only that you decide that, okay, Bitcoin is money, but also you need to take care of your custody. But taking ownership seriously, of course, that brings you freedom, as I mentioned in those points before about free mindset and the freedom of speech, freedom of movement. But it comes together with personal responsibility. Because I think a good analogy would be to compare it to owning a gun. Of course, it allows you to defend yourself, but you want to be careful about it. You don't want to shoot yourself accidentally, and you need to have processes around that. You need to really think carefully how you're going to do it so that you're safe and people around you are safe. The same applies here, and I think that's part of the reason why most people are still looking at self-custody as something that's too scary. We've tried to do research. It's not easy to define how many people have it self-custodially, how many people have it custodially, but the number is something like 1 to 4. Around 20% of value in Bitcoin is held in private wallets, and the rest is assumed to be held custodially. But we've seen these hacks, and this is something where people are reactive. They're not proactive. So they're gonna shift to self-custody more when they get hurt. That's usually the case. But besides that, we also have a couple other problems that I hope I'm speaking with a few builders right here in this space that also take it seriously, because I would categorize it in two specific kind of areas. on one side, we need to talk about UX, and on another side, it's about functionality of self-custodial Bitcoin. So from the UX perspective, this is about wallets, about managing your self-custody, and compared to custodial setups, it's usually seen, at least by the normies, as something that is complex. Something that has unfamiliar concepts, such as, maybe if you want to have your Lightning self-custodial, you need to manage your node, open channels, host it somewhere. You need to take care of your private keys and so on. So the abstraction of that complexity is not yet there in self-custodial setups, but also that setup is usually fragmented. So you need to be able to juggle multiple tools in order to be able to use self-custody properly. And that's also intimidating, not only because of the complexity and fragmentation, but also because it doesn't offer you any safety nets. Of course, we can talk about something like BitKey that offers you some kind of recoverability. I know it's a bit of a contentious topic because some people say it's not fully self-custodial, or it at least poses some kind of a exposure risk, because the server that they have as a third signature can essentially see your transactional data. But nevertheless, as it stands right now, most of the solutions are somewhat intimidating because of that whole personal responsibility point. And from the functionality perspective, usually your self-custodial Bitcoin is disconnected. So it's not easy to on and off ramp it. If you're doing it in a non-KYC'd way, it's probably even harder. But in a KYC'd way also, most of the exchanges, they really want to hold your Bitcoin, and then they offer you features. Self-custody is mostly used for storing and sending Bitcoin, but if you look at custodial setups, they offer you all of those crazy features so that you would deposit. You can earn on Bitcoin, you can use it as a collateral to then trade and get margin. You can have instant trading. You can have custodial cards that allow you to spend that Bitcoin. So lack of features or lack of feature parity is the issue. And UX, I think that's something that builders of wallets need to really think about carefully and build more and try to solve it. Functionality is something that we try to solve at wave.space by creating those tools to connect your self-custodial Bitcoin with the rest of the world, with the rest of the fiat. But having said that, I think that people are, at least it seems that they're waking up. So this chart right here shows Bitcoin on exchanges, the reserves that they have, and it's been going down similar like Ethereum, if you can see the chart. Basically, around 1 million Bitcoin was taken out of exchanges in the last year. It's still not crazy numbers, but the trend is reassuring, to say the least. And that's something that we've seen last year as well, and we decided, okay, first of all, we already have experience trying to build Mode in UK, which was a Bitcoin banking app trying to bridge it with fiat, but it was a custodial setup. Now we want to do it for us. We want to do it properly. We want to do it in a way that empowers self-custody. So with wave.space, we are trying to create tools that you need to live on Bitcoin. It's a company that is established by 3 of us, Bitcoiners. It's in Lithuania, and we have licensed services provided by our partners, banking partners, that are licensed in Estonia. And before I go into details, I want to talk a bit about, or at least, I guess, pay respect to the non-KYC'd ways, because that's something that every one of us kind of thinks and tries to judge what's the risk of my details getting exposed. What's the risk of then those details getting used to then either extort or seize or do something about my assets from governments or from bad actors. And every one of us assign different levels of what do we think that, what's the chance that this is going to happen. But if you decide that the chance is quite real, the action that you need to take is every day. You need to make decisions of going in a non-convenient way to try to either sell Bitcoin through peer-to-peer or acquire Bitcoin with cash. I think this is something that I'm not an expert of, and I hope some people that are doing it in a non-KYC'd way can at some point come and talk about that. But wave.space right now, in terms of the tools that we offer, is a KYC'd service that is trying to approach KYC pragmatically. And I'll explain how. But the way I see it is that I think, I don't know, everyone entered Bitcoin in different times. Most of us made some mistakes, right? And most of us either want to have some assets or already own some assets. But if you ever want to buy a house, you will have to somehow prove the value or the source of funds. It's not ridiculous to have a non-KYC stack and a KYC stack separately. I think a lot of us have this kind of a setup. So what we are trying to solve for is for your KYC stack. So firstly, I'll explain the first feature we have, which is Bitcoin swaps. Bitcoin swaps is an instant link between your own wallet and bank, and this is something that goes directly from your self-custodial wallet. It can be on-chain, can be Lightning, and goes straight to your bank, and vice versa. And the main kind of benefit that we bring with our offer is that you're getting your personal IBAN. What does it mean? It means that when you send and receive transfers, it's gonna be in your own name. So banks don't have to know that you're dealing Bitcoin. If you sell Bitcoin, you send it from your wallet, and the bank sees euros coming from another account in your own name as an interpersonal transfer. And again, in Europe, the regulation says that you can't discriminate transfers based on the country that they're coming from. So what we are providing you is a Maltese personal IBAN that is in your name and is your only connection to the fiat world. And specifically because we are providing that personal IBAN is the reason you need KYC for this particular feature or product. But also we provide instant transfers. So as I mentioned, SEPA Instant is already instant, and it's going to be enforced by October 9th to the last bit. Right now, receiving is already instant. And we have Lightning, which is also instant. So going from your wallet to bank to paying for rent is basically under 1 minute. And I think that's very important to be able to live on Bitcoin in those cases. Because for most people, they still have this notion of, okay, but what if I need that cash at some point? What if I then need to wait to withdraw it? With this, you don't need to really worry about it because you can have your Bitcoin until the last second. You need to transfer somewhere, you just liquidate it, it arrives instantly, and you can transfer to whoever you want, whether that's paying for rent or paying another guy that only takes transfers. And we charge 1% fee for that. There's no bank transfer fees, there's no Lightning fees on this. There's a small spread imposed by our liquidity providers here, which is 0.5%. So for this service, the total going from Bitcoin to Euro or from Euro to Bitcoin is going to be up to 1.5%. Actually, I want to show you how it looks like. So this is my Albi hub right here on the right side. And this is my wave.space account. So if I want to sell Bitcoin, I don't know if you guys can see it clearly, but hopefully you do. If I want to sell Bitcoin, I simply choose that I'm going to be sending Bitcoin. I want to set it to Lightning because that's the instant part. And let's say I want to sell 50,000 sats to my bank account. So I generate an invoice. Let me use my Albi Go for this. So I just scanned it, I'm gonna pay it. Hopefully no demo effect right here. Yeah, it's sent. So now it should appear quite quickly on wave.space, and as soon as it arrives, it's getting sold. So we never really hold your euros. When you send it, it's getting sold. When you send euros, it's getting sold. When you send Bitcoin, it's getting sold immediately. So you don't need to wait for it. You can see it got sold, and then all I need to do is I need to choose my bank account, confirm transfer. Now I will have to do an OTP. This is a MiCA requirement, by the way. But we will solve it with standing orders. So that's it. Confirm transfer. I just sent 45 euros to my bank. And it just arrived to my Revolut instantly. Probably there should be a notification at some point there, but you will not see it. That's it. That's all it took. I went from my Lightning to my Revolut. Now I can use that from Revolut, send it anywhere I want, pay for rent, pay for anything else.
What kind of exchange rate do you use?
The exchange rate is provided by our liquidity providers, and it has a small markup of up to 0.5%.
Compared to what? So it's not 1%.
Compared to, for example, Kraken. Yeah.
So it's not 1% fee.
1% is the service fee that we charge, which is in addition to the price that you see, and the markup, the spread is baked into the price already. You can compare it with, I don't know, whatever exchange you use. In some cases, it's going to be very similar to what you're going to get on other exchanges. You know, there's no real price of Bitcoin. It depends on the exchange. So I can't give you an exact answer of the spread, but it's up to 0.5%. In total, you will not lose more than 1.5% going this way. So this is Bitcoin swaps. It goes instantly one way, it goes instantly the other way. Now, Wavecard is something that probably most of you know wave.space for. I guess not many of you know wave.space in general, but usually when people hear about wave.space, they think about Wavecard. And this is something that is a Bitcoin debit card, but it's quite different from others in multiple ways. So up until the beginning of this week, it was a custodial card that is able to hold Bitcoin until the last possible second when you spend with it. It is accepted anywhere Visa is accepted, and that's, I think, a main difference from non-KYC cards. You know, we have a few service providers that are offering these cards that you can just get like prepaid gift cards. The issue with those cards is that they are usually not accepted by many merchants. The difference is that we basically get accepted everywhere. The non-KYC cards are accepted by like 4 times less shops. And also another main difference is that you can't add it. It's just a virtual card. You can't add it on your phone as a contactless method. Whereas our card, you can put it on Apple Pay, you can put it on Google Pay, you can just go around and tap it with it. And the moment you tap it, that's when Bitcoin is going to get sold. So
what about mandates? Can it be used for mandates as well, for subscriptions? And
yeah. So the way it would happen is, for example, even if you have a holding on your card and then it gets refunded, the way we do it is that when you get a holding on the amount, it gets converted from Bitcoin to euros, funded for that merchant, and let's say they refund it back. That comes in euros, gets converted back to Bitcoin. At that point, we don't charge fees. So it's at 0%, but of course you have this exposure of price difference, which we can't do nothing about. So that works, it just works like a normal card. You can put it on Netflix, you can put it on Spotify, wherever. And it's something that is also pseudonymous, because of course you have to KYC with us to get it. But from the merchant's perspective, you can set any name you want, and you can open a limited number of cards for free, which means that when you shop, for example, on Amazon, you can, they don't need to know who you are exactly. Or you shop anywhere else. The merchant, even if, for example, their data gets leaked, if you don't have your name on there, no one knows who bought that. But what I want to talk about today and the demo I want to show you is something that I think is never seen before, is NWC-enabled debit card. And I don't want to call it a self-custodial card because companies that claim to have self-custodial cards are not really honest with you guys. The way Visa works, the way MasterCard works, when you go to shops, they need to authorize payments. And to authorize payments, they need to be able to see those funds within the system. And basically, when you go into the shop, they need to be able to say, this guy has money, give him the product, and then they settle those payments between accounts the next day or 2 days later. It can happen even a week later. So they need to see that value in the card. And it's not really possible to basically have, at least right now, it's not possible to have your Bitcoin in your self-custodial wallet, then use that Bitcoin directly to purchase something in any shop, because Visa is afraid that you're going to withdraw it at the same time as you purchase it. You know, they need to know for sure that they can charge it. But what we can achieve, and what no one else has done it so far, is something that is very close to that. Because with the help of Nostar Wallet Connect, you can connect your Lightning wallet, which can be self-custodial, of course, and you can spend it automatically from self-custody. So the way it works is that basically you make a small sacrifice of a single transaction worth of Bitcoin held custodially. You need to think, okay, what can I spend in a single transaction? Maybe you want to be able to cover for a dinner. Maybe you want to be able to cover for just groceries. You can put it as low as 50 euros worth of Bitcoin, whatever. But that stays custodial, and that's what Visa uses to authorize payments. But you set that threshold. Whenever your balance drops below that threshold, more Bitcoin gets pulled automatically from your Lightning wallet, and you don't need to touch anything. So that's something that I will show you guys right now.
So it's a back spending limit.
Is a back spending kind of situation where you can set something up where, let's say you have 99% in your self-custody, you have 1% on the card, and what we've seen our users do up until now is they do it manually. You know, they have a small balance, and that's something we encourage, because at wave.space, we don't want to hold your Bitcoin, really, because the more Bitcoin we hold, the more we need to pay for custodians to hold that Bitcoin. They charge monthly fees on everything, and we really don't want to do anything with your Bitcoin. So you hold whatever small amount you want, the rest is in your own pocket, and it gets replenished. So I'm on Amazon right now. I didn't want to disclose it like this, but I'm Satoshi Nakamoto, at least for today. At least that's what Bezos is. I'm going to try and buy a book to my Kindle by Tony Parsons called This Freedom. Good book. Beautiful book. So basically, this is connected to my Albi hub, and I'm simply placing an order in euros. And by the way, you can also pay it in dollars. Actually, probably I just made a mistake because I paid slightly more than I should have. If I chose dollars, or I chose something that basically is the native currency, it would be better for Wavecard, because it would because we apply 0% FX fees. Amazon is probably going to charge me like 10, 20 cents for this conversion that they're doing, because this book is in dollars. But if you want to travel around with Wavecard and you want to pay anywhere in the world in whatever currency you want, you can. And we are not going to charge you for it. And that's something that is different from other cards. For example, if you look at Coinbase and Coinbase card, let me just put in my 3DS password. If you wanna, for example, use something like Coinbase card, they charge something like 2% in fees. Then they put crazy like 2% in spread. And then if you do it in, oh shit, demo effect.
Demo effect.
Maybe they have a blacklist for the name.
Let me try again. I think it went through.
So, order placed. Yeah, it was order placed.
Yep. So you can see on my Albi hub, 8,466 sats just got charged. So as soon as I bought the book, it automatically replenished the same amount back from my Albi hub. Because the way it looks on wave.space, you can see the deposit just came through as well right here, 8,000 sats. The way it looks like is basically you have your spending power, as we call it, which is your custodial card balance. And I set it at 130,000 sats, which is like 100 something euros. And then I have my Lightning wallet, and the total of that is your total balance. So if I'm keeping my balance exactly as the threshold I set, it can be basically seen as your card limit. It's never going to go down, because as soon as you spend, it gets replenished, and it always stays at that amount. So essentially, every purchase you make just gets back spent from your Albi hub or from whatever Lightning setup you have. So that's how it looks like. At least it worked from second time. I don't know exactly what happened the first one. But I want to talk about also what's coming next. So I just showcased swap. I showcased cards. These are the KYC services, but we don't want to do KYC if it's not mandatory, right? For card, we need to do KYC to issue to be basically to please Visa. For swaps, we need to be able to issue personal IBANs. But for loans, we will not be doing KYC, because you can post collateral in Bitcoin. You can get USDC out if you want. Of course, if you want to get euros out, or if you want to fund your card and make it a credit card, then of course it goes back to the KYC service. But the KYC part is really the tentacles of the fiat world, where if you want to have that bridge that is convenient, you will have to do KYC. But plenty of people take it in USDC. I think that's fine. When we introduce it, we'll have that option, and there's going to be non-KYC'd. Rewards also non-KYC'd, because the way it's going to work is basically like Honey browser extension, but instead of farming it from themselves, you can basically inject the affiliate link on any merchant that is participating, and that affiliate link is going to provide you some kind of a cashback that is usually paid to the affiliate. We just pass it back to you in Bitcoin, and you get Bitcoin rewards from it. And then we also want to do a wallet. We will likely go with Arc as a solution. We don't know exactly yet. This is far away, but we think Arc is something that could potentially be a good self-custodial scaling solution for instant payments. It's compatible with Lightning. These guys are, I think, just about to launch mainnet, or maybe they just did. I don't know for sure. But the idea for the wallet is also to launch an app that would unify all of these tools together into one Bitcoin experience that is your Bitcoin bank that is encouraging and promoting self-custody. And of course, we do it on-chain, we do it Lightning, we do it with Nostar. It empowers any wallet. We're agnostic. Whatever setup you have, it's going to work with the tools that we do. These tools are also embeddable, by the way. So if there are any builders that want to have easy off-ramps, on-ramps, maybe through Nostar Wallet Connect, maybe through Lightning, we can do it. We can embed either off-ramps, we can embed cards, so that your customers have this additional extension to do whatever they want with it. Now, the ecosystem we are trying to create also gets leveled up every time we add more features to it, because all of the tools that we are creating, they're interactive, right? So as I mentioned, the swap card things, those are KYC'd, but then when we launched the card, you can buy Bitcoin into the card. When we launched NWC, you can have a semi-self-custodial card. You can also buy and sell via Lightning, which I just showed. Loans, you can have it either non-KYC'd in USDC, or you can have a Bitcoin credit card, where you will be able to, instead of spending your Bitcoin, either spend, either collateralize it and just, instead of selling, spend the fiat, or you can also, we are thinking, possibly to create this kind of a system where you could collateralize your Bitcoin and get more Bitcoin into your card. So it's like essentially up to 1.5x leverage on your Bitcoin through a loan. Rewards. With a card, we can introduce something like boosted cashback. You can get preferential rates when you use the card together with the browser extension. And then the wallet allows us to create a unified experience where we can have one-tap loans, one-tap swaps. This is something where we own the tools, we own the wallet, we can create a vertical experience that is the best possible experience to showcase the benefits of our tools. That's pretty much it. The thing I want to end with is the life can be very simple. As long as you focus on your craft, you save in Bitcoin, you can live a peaceful life. I hope many of you already are living on Bitcoin. Those that don't, hopefully you will start at some point. So thank you guys for listening, and